we have a gold reserve. Why do we have a gold reserve? It's certainly not to back the US dollar because the US dollar is not backed by gold. So we have a gold reserve as a way that we have the ability to pay for things in the event the dollar would be somehow locked out of a market or fully debased. And so why would you have a Bitcoin reserve? Well, if countries start trading using Bitcoin for international settlement, or they use it as a reserve asset, the US needs to have an ability to affect those markets. And if the US holds enough Bitcoin, they can essentially either support or have a threat of attacking a market by using Bitcoin as a strategic weapon.
If the US adopts Bitcoin as a strategic asset, it could definitely expand its global power and send Bitcoin's value to sky-high levels. That's the latest word from Fred Thiel, CEO of Marathon Digital Holdings. By holding a large amount, the US could use Bitcoin as a tool to either help or disrupt Bitcoin-based markets and assert the country's dominance. On one hand, this could definitely raise concerns because Bitcoin is meant to be decentralized, not controlled by any government. On the other hand, this involvement from the US could surely make Bitcoin more legitimate to the eyes of the public and drive its value even higher. Make sure to stick around until the end of the video, as Fred Thiel shares more exciting Bitcoin outlooks. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free, and you can always change your mind. Now, here's Fred Thiel on Bitcoin's rise.
You have $100 billion of assets in US ETFs for Bitcoin. I don't think the US government would necessarily want to tank the price of Bitcoin and suffer the ire of all these investors.
Okay.
You have a substantial amount, a growing percentage of Bitcoin holdings in the world flowing to the US because of the ETFs. And I think that over time, it's going to be of strategic importance for the federal government to defend that in the same way that they defend the dollar and try and control oil prices. But, it's interesting. You see the dollar is on moving up, which typically would be a bad thing for Bitcoin. We're not going to see interest rates drop dramatically any further. We're just going to have to live with real rates somewhere in the 3 to 4% range, most probably, which means that people need to find assets that are going to drive returns that are above the risk-free rate of return. And there are not a lot of assets that do that effectively today, outside of really equities and Bitcoin. And Bitcoin has been the best performing asset over the last 13, 14 years. So I think that you'll see more and more institutional investors own Bitcoin. You'll see companies start to own a little bit of Bitcoin. And over time, this number will grow. And the best thing that could happen is that it doesn't happen all at once. It happens slowly. It builds slowly. Because if it happens all at once, you get risk for high volatility. If it builds slowly, the system starts just adapting over time. The risk you have, though, is that, the whales become the ETFs. The government, sure, could be a whale, but the government never acts very quickly about anything. It's, the ETFs are very driven by the underlying shareholders, right, who are the individuals who are buying shares in the ETFs. And so public sentiment and emotional sentiment for Bitcoin will be just as important as public sentiment is for equities. The only reason for the government to try and buy Bitcoin from a miner is because they would want to buy Bitcoin that hadn't been in a wallet that may have been tainted at some point. Because miners are going to sell them at the spot price if they sell them, which the government could go buy in the spot market anyway. I mean, look at MicroStrategy. If anybody would have had a benefit of buying Bitcoin directly from miners, it would have been Michael Saylor, but he buys them in the open market because he knows miners won't sell them at a lower price. And most miners are hodling their Bitcoin anyway, like ourselves. So there isn't a lot of new Bitcoin going into the market. And, as every halving goes by, it's less and less. So I think if you look at investing in the equity of whether it's MicroStrategy or Amara or spot Bitcoin, it really depends on what the objective is. If what they want to do is hold actual Bitcoin, they're better off holding Bitcoin because they don't have control over what Mara or MicroStrategy do with the Bitcoin by being a shareholder. And I don't really foresee the Treasury Department ever being a shareholder in companies like that, unless it was because of a major financial crisis and they were doing a bailout like they did with the banks back in the great financial crisis. However, I think people can look at proxies for Bitcoin like miners and like MicroStrategy, but ever since the ETFs have come, I think the interest in the miners being a proxy for Bitcoin has decreased from a pure Bitcoin perspective. If you look at our company, we are valued, if you use the similar multiple of how many Bitcoin company has on its balance sheet to its market cap from MicroStrategy and apply that to us, it would appear that the market doesn't value our Bitcoin mining business at all. They value our HODL. Right. Yep. So clearly there is kind of a misalignment in people's understanding of the business because we mine Bitcoin at a discount to spot as well as buying Bitcoin at spot, where MicroStrategy just buys Bitcoin at spot. So I think there's a transition happening in how people view miners. You have miners going down the HPC route, AI route, which is selling the future. We'll see how many of them manage to do that successfully. I think the CoreWeave strategy was a one-off. I don't think you're going to see other miners be able to do that successfully outside of Core Scientific. And then you have the pure play miners like ourselves, kind of CleanSpark and Riot, who are very focused on mining. We're different in that we also own energy generation. We owned a wind farm. We owned flare gas, oil-field flare gas, where we generate electricity, all driving towards zero cost of energy. Because as a mining company, if our energy cost is zero, then we can mine no matter what the price of Bitcoin is. And we're not being stressed about having to upgrade our fleet all the time. Whereas if we're just buying energy off the grid like Riot or CleanSpark, then we have to every 3 years refresh our fleets, et cetera. So we're moving towards a different business model, which is much more long-term. And we'll see what those companies do, up to the next halving when things will get very different.
Meanwhile, Oklahoma Republican Senator Dusty Deevers has introduced SB 325, the Bitcoin Freedom Act, a bill that aims to integrate Bitcoin into Oklahoma's economy by offering employees the option to receive their pay in Bitcoin and allowing businesses to accept Bitcoin payments. Deevers framed the bill as a response to inflation, showing Bitcoin's potential as a hedge against inflation due to its fixed supply and decentralized nature, which contrasts with traditional currencies affected by central bank policies. Now let's go back to Fred Thiel as he discusses this further.
We have a blog post on our website that I would recommend all of your viewers and listeners read, which is a very simple but technical breakdown of why this is still pretty far off. And by the way, the engineers at Google have said in a recent interview that they're not going to be breaking Bitcoin's algorithms anytime soon with what they have. It takes a lot more capacity in what they have. There are two different encryption algorithms used by Bitcoin. One is used by the Bitcoin network. The other one is used for wallets. The encryption algorithm that is used for wallets is not dissimilar to the algorithms that are used for protecting all bank accounts, passwords to systems, asymmetric keys, basically. And asymmetric keys are very susceptible to quantum attack, whereas symmetric keys, which is more similar to what's used for securing the Bitcoin blockchain itself, are much harder. Plus the fact that you just have so much compute power continually being added to the Bitcoin blockchain that makes it even harder. But you could go from SHA-256 to SHA-512 through a simple software change, which would make wallets even that much harder to hack and add decades more to the kind of potential risk curve. And you're already seeing companies coming out with quantum-proof wallets. So I think, this is something that it's a great clickbait. I get this question all the time, and which is why we wrote this blog post, because it kind of lays out how really difficult it is and how the Bitcoin network will deal with these things in the future. So
some other cryptos may be more susceptible to this, would they not?
Yes, I think, here's the kind of way you have to look at it. RSA encryption, which is what the vast majority of password protection systems use, is very susceptible to quantum encryption. And I was actually chairman of a German company a number of years ago that was very involved in submitting to the National Institutes of Standards and Science and Technology the recommended standards for post-quantum encryption or quantum-proof encryption, of which a number were submitted and 2 have been chosen by NIST as the recommended solutions. So I think we've spent a lot of time looking at this problem. The biggest potential target for this is not Bitcoin, it's banks. It's every single secure system out there, because with Bitcoin, if a wallet is hacked, everybody sees it right away, right? And then there's something you can do about it. You don't see necessarily that somebody has just taken the 3rd and 4th decimal points of a rounding correction from an interest rate calculation at a bank, because it'll never show up on somebody's statement. It might be a 1-cent deviation, right?
Sure.
But it's not something anybody's going to ever calculate. And you could steal billions of dollars that way.
Yeah, I think that's the
And
plot
the
of,
answer...
that was the plot of Office Space, but go on.
Yeah, but I mean, it's a very obvious attack, right?
Yeah.
And, you could get into people's accounts and just move money. So, it's RSA algorithms are the protection mechanism for the vast majority of financial infrastructure today. That's the target for quantum.
So
because you can do it quietly.
What's the security protection mechanism against this for the financial institutions?
Yeah, they have to upgrade to quantum-proof encryption, which, again, NIST has recommended standards. It'll take about 5 years for companies to roll out these changes, but it's a significant lift of work. This is kind of a Y2K problem. You can look at it like that.
I see. Okay, but for the crypto space, like I mentioned, perhaps other cryptos with weaker encryption may be more susceptible, and perhaps we'll see a rise in Bitcoin dominance over the years because of this issue?
I think you'll see a rise in Bitcoin dominance for a variety of reasons. One of which, A, it's the biggest. B, it's the one institutions are adopting. Ethereum is a programmable network. It's used for building solutions on it, but Ether is not viewed as a store of value by investors, right? So, and then you have to look at susceptibility of hacks on the Ethereum network, and you've seen lots and lots of hacks historically on all of the bridge points to Ethereum, right? All of these, how different protocols bridge to and connect to Ethereum, especially a lot of DeFi applications. Yeah. So a ton of risk there. And I think that's the areas where I would be very careful, because at the end of the day, the simpler something is, the harder it is to hack, because it's very easy to focus on locking it down. And Bitcoin, similar to the internet, the core internet code, it's very simple. Whereas Ethereum and some of these other layer ones are very complex and centrally controlled group of people drive changes and modifications. You look at the staking within the Ethereum world, you have a huge concentration of Ethereum that's held by certain staking companies. Their systems could be susceptible, things like that.
Quantum hacking is often feared in the world of digital assets, but when it comes to Bitcoin, Fred Thiel believes that there's no need to panic. While quantum computing could pose a threat to some encryption methods, Bitcoin's core system is much more resilient. Unlike other cryptocurrencies, Bitcoin uses a more secure encryption algorithm for its blockchain, which is far less vulnerable to quantum attacks. Plus, the Bitcoin network is constantly growing and evolving, making it even harder for any hacker, quantum or not, to break in. Anyway guys, before we go, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top-on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it provided you with some value. I'll see you all in the next one, And as always, all the best.